Sachs could be on the verge of a major shift in the way it sets financial targets, according to a report in the Financial Times. The Wall Street firm will reportedly avoid setting strict profitability targets at its January Investor Day, opting instead for longer-term through-the-cycle goals. The FT says part of the Investor Day presentation will be geared at highlighting the bank's core Wall Street businesses, including new funds focused on venture capital, distressed capital and real estate, while taking attention away from Goldman's consumer banking initiatives, which could take longer to pay off. Shares of Goldman Sachs up about 30% on the year, but still lagging the likes of JP Morgan and Citigroup. I think this is a really interesting article. What is unquestionably true is the importance of their January Investor Day relative to all other typical annual Investor Days. This is a really, really big one for them. They've delayed it already, and certainly share prices will react to that much more so than they have other banks' recent annual Investor Days and Goldman Sachs' own recent Investor Days. As to trying to guess ahead of the Investor Day exactly what they're going to announce, I'm not sure how easy that is to do, but long-term, short-term targets, they're going to be absolutely key for this stock going forward.
Yeah, I mean, obviously, it's going to be an important investor meeting because we're talking about it, months in advance. So,
and it's been delayed a number of times.
But
new CEO, new management team.
Yeah, so they've had a lot of transition. I think Goldman's a stock that we like. You just mentioned before that it's lagged its peers year to date. Analysts are generally negative on the stock versus positive. The buy. There's more sells and holds than there are buys, I believe. And the valuation is pretty, attractive relative to its peers. And, the consumer side of the business, I don't want to say this is a reason you should go out and buy the stock, but you basically have a cheaper stock than the rest of its peers, and you have almost a free call option on the potential success of Apple, the Apple Card, or the Marcus consumer unit. So I think it presents a very nice opportunity, I think, for investors focused on the long term here. And it's a name, like I said, we do like and we own.
I do also think an interesting part of the FT article about wondering whether they're going to try and push the focus on their asset management and their new kind of, or newish foray into private equity and expanding their kind of the investing and lending business. That will be quite interesting as opposed to necessarily the focus on consumer. But we'll see.
The consumer is years down the road before that's going to impact the bottom line. So you want to focus on more what the bread and butter part of the business right now.
Either way, next week, Tuesday and Wednesday, for the next big update on all of the banks as they go into the new year. Goldman Sachs Financial Services Conference will be the exclusive media presence at it, and hear from a big slew of CEOs and executive leaders, including someone senior from Goldman Sachs. So a little bit of a preview ahead of their own Investor Day in January. We've got